All right, everybody, let's talk about what's really going on right now, because Bitcoin is sitting at 60,000. Everyone's acting like that's some kind of safe zone, like it's a hammock in the middle of a hurricane. But if you watch the market long enough, and I have, you know this isn't safe. This is the eye of the storm. Bitcoin isn't calm. Bitcoin is waiting. And the big players, they're not all in, but they're not all out either. They're in the middle gear, the gear where they watch and they wait and they plan, because they've played the market, this market, years. And the market is finally waking up. See, 60,000 isn't a technical level. This isn't a Fibonacci level. This is a magical support line. It's a psychological level. It's the number that makes people breathe a little easier. It's the number that makes investors say, okay, maybe we're not crashing. But that's exactly why it's dangerous, because when Bitcoin sits at a round number like this, it's not because the market is confident. It's because the big hands are holding it there. They're not letting it fall, but they're not pushing it either. It's a truth zone, a parking lot, a holding pattern. And when whales hold Bitcoin steady during fear, it's never for your benefit. Now let's talk about the real trigger, the stock market. The Nasdaq's wobbling, tech stocks are bleeding, war is pushing oil higher, inflation is creeping back in, rate cuts are disappearing. The U.S. debt machine is overheating. Investors have been lied to all year. Soft landing, inflation is under control, AI is save everything. But now the mask is slipping. So what's happened when the market marches lower? People start looking for anything outside the system. And that's when they run to Bitcoin. Not because it's safe, not because it's stable, but because it's not Wall Street. It's the only asset that trades 24/7 and has no central bank, no government issuer, no counterparty. So scared money hides in Bitcoin. Temporarily, that's when the whales smell blood. This part nobody wants to talk about, but you and I have seen it 100 times. Here's how the whales play the game. Stock market bleeds, fear rises, retail panics, 60K looks safe, people start dipping their toes in. A little green candle, a little bounce, a little hope. Retail thinks this is it. Bitcoin's going to go to 90K. They unlocked millions. Price dropped fast. Retail becomes lunch. Whales dump into that, hoping that millions uploads, price drops, retail becomes lunch. That is what I'm saying. Bitcoin stabilizes lower. Whales reload, cycle, repeat. This is not conspiracy. This is not paranoia. This is market structure. Bitcoin is the most emotional asset on earth, and whales profit from it, from the emotion. Here's the twist. This cycle is worse than the last one. Why? Because now the EFTs, BlackRock, Fidelity, VanEck, ARK, and Franklin Templeton, Wall Street whales are now crypto whales. They have unlimited liquidity, algorithmic trading, derivatives, futures, options, EFT flows. institutional leverage. They can move Bitcoin like a puppet, and when the stock market is falling, they use Bitcoin as a hedge, a liquidity sink, a volatile weapon, a profit machine. This is why Bitcoin feels stable at 60K. It's not natural, it's engineered. So here's the truth. Bitcoin at 60,000 isn't safety, it's a setup. It's the calm before the macro storm. It's the holding pattern before the whales make their move. It's the moment where retail thinks they're safe, right before they become the meal. But if you understand the game, if you see the pattern, if you watch the behavior instead of the price, you stop being the mouse and you stop being the lunch and you start seeing the cycle for what it is. And that's the sovereignty. Not trusting the system, not trusting the headlines, but trusting your own eyes. So guys, stay sovereign, stay aware, like, follow, and subscribe. We'll be back. Have a good morning.